Good morning, Oracles. Well, Tesla had a great day to finish yesterday after the FOMC meeting, finishing just under $700 at $69.99. I mean, you can't make this stuff up. But we are, at the time of this recording, down about 3.5% pre-market. So this is something that, was a possibility. We saw it last time with the FOMC meeting where, we looked like we were going green and then had a complete reversal the next day. So is this going to be a bear trap and we rally back out of this? Was that a bull trap yesterday? That has yet to be seen. We shall see how this plays out. But looking at the dot plot that they have for the Fed, looks like they're not looking to end raising rates or reverse rates until 2024. So as we talked before about the timing of when the Fed could U-turn, and every single time the market has gone into a bull rally and a bull run after situations like this have been when the Fed has made that U-turn. So as of right now, it looks like that signal would be in 2024 for a true bull run to come out of this. Not to say that, maybe we have hit the bottom and we can kind of go sideways or coming up a little bit over the next 2 years, but until we get to that point where the Fed turns around, we are not going to have what we had for the last 10 years coming out of the housing market crisis. And now whether we get into a recession or not still has yet to be seen. The Fed does not think that we will get to one. Many of us do think that we're headed there, but you start looking at the fundamentals of these companies that are out there. And let's look at Ford, for instance, who announced yesterday that they are not profitable on the Ford Mach E. And they said this is due to rising battery costs of up to $25,000 per vehicle. So if they're not making money on their Mach E's, which we had talked about on here many a time, with Legacy Auto not making any profits on their EVs, Ford has now confirmed this. Now, they did say that they are profitable on the Ford F-150, but the Ford F-150 is selling for less than the Mach E, and they use very similar batteries, so the components in them are a lot the same, which means that the costs are also going up on the Ford F-150. So I'm not sure how that one's profitable, but the Mach E is not. Either way, all that it means is that Ford is not profitable on their EVs, which we had spoken about, and Tesla is. And the cost of vehicles for roughly like a Model Y, Rob Maurer had discussed this on his channel, a Model Y cost is around $35,000 to $40,000, and the average price of the Mach E is about $50,000, which means that the cost is going to be about $50,000 if they're not making any money on it. That's a significant difference in cost of about $10,000 to $15,000 per vehicle. And then to top it off, because Tesla's demand is so high, they just raised the prices on all of their vehicles as well. Well, not all of them, but let's go down the list here. We've got the Model 3 long range is up to $2,500. The Model Y long range is up $3,000. The Model Y Performance is up $2,000. The Model S long range is up $5,000. And the Model X long range is up $6,000. So all of these price increases went up yesterday. So now this tells me, obviously, that demand is high, and Elon had spoken about it before, where they have been raising prices based upon anticipation of where the cost of goods are going to be in the future. Because demand is so high, you put in a reservation for a vehicle now, and that vehicle is not going to come off the line for 6 to 12 months from now. So what they're trying to do is figure out, what do we feel the costs are going to be for our materials 6 to 12 months from now, and we will adjust pricing accordingly now. So they're just trying to stay ahead of the game, and so this is their way of anticipating costs for the vehicles could still be going up, as well as demand still going up, which we know is happening. I mean, we've been discussing on here about lead times and how mine has changed all over, and many of yours have been bumped out to be a longer lead time for a lot of these vehicles. And yes, ramping is going to start speeding up and having that exponential growth come the Q3 and Q4, but we're not there yet. And then we also got in satisfaction ratings from Zutobi from their Global Happy Motorist Index, and Tesla ranks the highest on that list. So, when it comes to vehicle ownership, Tesla owners are the happiest. Demand is continuing to go up, and they're raising the prices to match this and offset any costs in the future. I mean, they have a very, very good recipe for success that they're building on and going forward with. And then NHTSA had put out an investigation report about all the FSD crashes, and even NHTSA themselves said that the data that they released isn't the most accurate because of how they went about it, because they based it off of every 1,000 vehicles versus miles driven. And Rob Maurer over on Tesla Daily did a great breakdown for his last couple of videos, so if you want to see the full breakdown, check it out there. But that's really what they're talking about, is it's based off of vehicles versus miles driven, and Tesla has the most vehicles, and when it comes to FSD, there's a lot of FSD that's not as good when it looks at Chevy and Ford and GM and all of those. So if they don't have an FSD that is worth using, then just because the vehicle has it doesn't mean it's being used. So how can you really justify those numbers? And that's sort of what NHTSA went into, but they still had this report out there. So if you see any negative headlines on this, know that even NHTSA themselves admitted that the data that they have is not the best data. And so based off of the news that we had gotten yesterday for the FOMC meeting and interest rate hikes, looks like we should be getting a 50 basis point hike in July, and the market is pricing all of this in. So we'll see how the market trades, because Tesla right now, despite any specific news to the company, is really not going to trade for a long time off of specific company news. It's really going to trade off of the macro environment. And again, based on the pre-market numbers right now, the entire macro environment is pulling back again. So let's see if this is going to turn around and come back up, or if we're going to continue to fall. Based off of the charts for Tesla, there was a gap down that we had filled yesterday. When we went back up, we filled that gap. And there's another small one above it. So whether we hit that one or not, I don't know. Currently, we still have 620 as our low. So this is what I'm paying attention to as we come back down. Are we going to go lower than 620? Many of you on here feel that we will. We'll get down into the 500s or even the 400s. Again, time will tell on that one. But chart-wise, looking at it, if this ends up being another dead cat bounce and a bull trap, we could very well fall below those levels. And so truly what this time is telling us right now, and what Jerome Powell had mentioned in the meeting yesterday, especially when it comes to housing, but it also holds true for the stock market, is it's going to take some time to get this rebalancing in place. You're just going to have to be patient. That's really all it is. And during these times of being patient, this is where you're either going to hold cash on the side, waiting for that turnaround, or dollar cost average, or whatever investment strategy works best for you. For me, I have adjusted my dollar cost averaging, and I am still going to be dollar cost averaging the same as I had been for Tesla when it comes to $15 a day. But when it comes to the dips, I'm just monitoring what levels we're at, because I love Tesla in the 600s. I love it. I loved it when it was just under $1,000. Because I'm looking forward 5 years, and looking forward 5 years, I can see the stock pushing well over $3,000. So with that in mind, I am just going to be sitting back here and doing that, and then waiting to see till we get to a lower level or a turnaround before I start dumping extra money in. But I have been dipping a little bit here and there, $10 here, $10 there extra. But I have been saving extra cash on the side. So my other investments that I have started to wean off of those to add more cash onto the side, so that when we get to the point where we do see this turnaround, I can start dumping in heavier into Tesla. And if we truly are not going to turn around in the entire market for real into a bull run until 2024, this is going to give us about 1.5 to 2 years to accumulate as many shares as possible. That's what you do during these times, because that's how fortunes are born during these bear markets, is accumulation of shares during low sale price times. And looking at the fact that we're going to be going through these times for potentially that long, if we do end up getting into a recession, and Ford is having EVs that are not profitable, just start connecting the dots and you'll see that going through all of this, Tesla is going to come out the strongest, and some of these legacy automotive makers might not survive if it gets ugly enough. And GM doesn't speak much at all about this. They're touting all of their new vehicles and releases that they're coming out with, but we don't know what the profitability is on any of those. And looking at the vertical integration of Tesla, the reason they can have costs so low is because they have, advantages of scale. Plus, they have been working with suppliers for over a decade to get prices where they're at in vertical integration, and they get most of the materials themselves. So when it comes to legacy auto, they don't have that. GM and Ford are going to be in the same boat, and so if Ford is talking about the Mach E not being profitable, I'm going to guess that a bunch of GM's EVs are also not profitable. That's just a guess. Let me know your thoughts in the comments and how you feel when it comes to profitability for legacy auto. Where do you think they're going to be at? Because obviously Tesla has margins over 30% and Ford has negative margins. So where do you think GM's going to be at, and how long do you think it's going to be before legacy auto can actually start putting out EVs that are profitable? I relate this profitability to like going to the gym. And let's say you go to the gym and you've never been to the gym before, and you see somebody who has been obviously a dedicated gym goer and they're very fit, and you think that within 3 months you can become as fit as they have become with the wisdom that they have that they've gotten over the last 10 to 15 years. You just can't do it. It's physically impossible, and this is what legacy auto is trying to do when it comes to profitability to match Tesla. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all the latest Tesla news, pertinent stock market information, and all of my daily trades. We do have a Discord chat, that link is in the description down below. And if you'd like to support the channel any further, I am over on Patreon, that link is also in the description. Thank you so much, have a great one.